Please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Alright, so we missed last week's class because we had a long weekend, and in the interim last Friday was non-farm payroll Friday. Essentially what happened was US job numbers came in pretty much on the money, a little bit better than expected. So they weren't bad, but the net effect on the US dollar was not great. So in essence, what happened was that the job numbers were good, but they weren't really good enough to renew the demand on the US dollar. In other words, the market didn't see enough strength there to foresee that interest rate cycle that is predominant. Okay, so essentially it kind of went both ways, and in the end it kind of lost ground against a lot of the major currencies. So that's what basically happened on last Friday. That was the major thing for the week. Of course, it was a week interrupted by Easter, which meant lower trading volumes, a little bit thinner markets and less activity. Now this week leading in, of course we have tomorrow is the big news for us over here in Australia, which is the RBA rate statement. Nobody really thinks there's going to be a rate increase or a decrease, so it's expected, most analysts are expecting that it's going to remain unchanged. However, you never know with the number, so currently we're sitting at 2% and we're expecting no change and remain at 2%. We also get the trade balance number at 11:30, so generally that Tuesday, the first Tuesday of the month for the Aussie dollar, can be a little bit volatile. Okay, even the statement in itself, what we're looking for here is any indicators of what they may say, specifically since our Aussie dollar has been at a level which is really uncomfortable for the Australian economy. So we're nudging 76 and we're pushing and huffing and puffing towards that 80 mark. So whatever is said in this statement could have a key effect in dragging the Aussie dollar back down. So just keep this in mind. It's not a good enough reason just to short Aussie dollar right now, but all I'm simply saying is that the level that we are at is an uncomfortable number for the Aussie dollar. We should really have a lower dollar, somewhere in the, it's public knowledge, it's not a secret. They have said it in the past, a good trading level for the Aussie dollar is in that 65 to 68 range. Right now we're sitting just almost at 76, so this statement becomes critical, especially after such a long rise, and we'll have a look at that when we jump over to our charts. So this one is key. Perhaps this number here that we're expecting, the 2%, is probably going to come in a bit the same, but whatever they say is what's going to drive the momentum of the Aussie dollar. Okay. On other news fronts, we have GBP PMI numbers. Now last week the sterling pretty much missed PMI numbers and it took a bit of a hit. It was the worst performing currency of the week. Lost a lot of ground, so we're really keen to see what this number comes in at, and it could be one that moves it around a little bit. Okay. Kiwi, we got GDT price index, and then we have a whole range of US data, unemployment claims, the minutes for the FOMC, and crude oil inventories. I guess also for the euro, Mr. Draghi speaks at the end of the week, so, and along with Miss Yellen, okay, for the US Fed Reserve. So these are the highlights for the week. In essence, based on purely just raw data, the currency that's most likely to have the biggest movement this week due to data alone is probably going to be the Aussie USD. Okay, so take note of these times. Now these times have already been adjusted for daylight savings. Daylight savings is over, so now we're on just a normal Australian Eastern Standard Time. So this time is my local time, which is Sydney based time. Make your adjustment wherever you are. I believe now the whole entire eastern seaboard of Australia, we're in line together with Queensland. They don't have daylight savings. So make a note, and I guess the one that's going to move the most this week due to data is going to be the Aussie US dollar. Okay, so let's bring on our charts. Let's have a look. It's a little bit quiet. I'm going to try and find some trades. Let's see if there's anything that we can move. I'll try and get you guys involved so nobody falls asleep. Aussie dollar daily chart. Quite a few of you are on a T-chaser trade. You should be, and if you were on it, you're probably in from around about here. Can I just get a show of hands? Who's in a T-chaser trade here and who's still got the trade running? If you can just give me a show of hands, I just want to see how many. There should be quite a few of you. Okay, so we've got one. We've got three. I know that there's probably about 6 of you who are on this particular trade. All right, so this is a trade that just keeps going, and we're well established into a trend here. So if we're in a trend, the only type of trade that we're interested in is a trend-based trade. Now, we are at a point where, we're kind of hitting a little bit of the ceiling there. Should we get a nice breaking candle of such, that will give us a new burst of energy, and that should take us towards that 80 level. Okay, now whatever happens tomorrow could help that movement, or it could decline us back towards down. There is a bit of support here at that 75 range. So what may happen is we may start to range in that area between that 80 and 75 level for a little while. But the most logical trade that we can see here is I would be looking for a pullback, and I'm going to look for price action around about this area, and then I'm going to try and hit that trade in continuation of the trend. Okay, so that seems like the most logical trade possible, so that's the one that I'm going to look for. I'm on the assumption that I'm not in a trade. For those of you who are in a trade, well then obviously you're holding, and we're hoping that we can break that ceiling so that you can get through to your next level. Let me just have a quick look on a 4-hour chart, see if there's anything available for us there. No, there's nothing really there. So the most logical trade that is up for grabs is just something to continue on with the trend and try and capture an inside candle off a pullback. So what we're looking for, just to reiterate, is I would like this to come down, then I'd be looking for a candle formation that looks a little bit like this, and then to drag it up in that direction. If you are new to the class, or you're just here as an invite and you don't understand what I'm actually doing, I do cover these specific methods on a Thursday. We've been covering it over the last 2 weeks. So I can organize access for you, but I don't have the time right now. I'm just using that knowledge just to analyze the current market. All right, so that's our Aussie dollar. That's our plan. We're waiting for a pullback. Let's see if we can find a nice inside candle or an engulfing candle and see if we can break it up. All right, let's move on. Euro USD. Now, last Thursday when we were doing counter trend, we had a candle and we had an opportunity that looked like might have set up over there, and this is the beauty of price action trading. If I just simply had shorted over there, you can clearly see that we would have been stopped out of this trade. In essence, what happened is this candle here created a new high, and therefore an inside candle was never formed. So basically the trade never showed up. So we just walk away from it and we look for another one. We've now broken the highs, and now we're just looking to see what's next on the agenda. Now, for me, a couple of things that we could do here. the distance from the moving averages is starting to expand. I kind of feel that this may push up a little bit more, and then when it comes down, this is the area that we're going to look for the trade to move in this direction. We are in trend. Our moving averages have crossed over, so I'm assuming that we're in trend, and we are going to try and capture a pullback entry, just like the Aussie dollar. Okay, now since the ceiling over here was broken, prior to that I was interested in a short trade if it came up, but it never did. So then we simply just move on. Let me have a quick look on a 4-hour chart and see if there's anything available for us here. There's nothing showing at all. It's a really not nice chart. Okay, so Euro USD, let's just stick with the game plan. Okay, so we're going to wait for a pullback, and if we get it, then we're going to look for the entry as a long. Okay, so it's best to wait for the setups rather than to force a trade, because otherwise there's just no point. All right, we're not in the game of predicting the market. We're in the game of identifying the highest probability setups. That's all we're interested in. If we guess correct directions, who cares? That doesn't get us what we need to do. We need to jump on the highest probability trades. GBP USD. Okay, GBP USD is into a nice little converging triangle, which we spotted last week. So let's play this one out. This one looks like we're very, very close to a setup. We did get that last week, but we couldn't quite get a trade out of it. So what I want you to look for, we're getting into the tight region. Let me adjust this. I could possibly justify that I'm touching here. Let's see how big this candle turns out to be, this one here. Okay, so this is what I'm proposing. Let me zoom in so we can have a bit more space. If this current candle stays within that parameter, and let's say finishes over here somewhere, like it ends up about there, that'll give us a nice inside candle, and that should just about give us enough room to trade to the top side. Okay, what I'm looking for is the trade that I'm interested in. If this one ends up too high and I don't have enough room to hit my 1-to-1 at least, well then I won't take the trade. Does everybody understand that? I need to make sure that wherever the current candle finishes, okay, that I have enough room to hit my 1-to-1 target. Okay, are we all clear on that? Just please let me know that you understand. Yes? Okay, fantastic. All right, so of course I'm on the assumption that this candle doesn't break, that doesn't come down and it ends up like this. What happens if I get this? Give me 1 second, let me redraw it. What about if this candle all of a sudden is something like this? Is that a signal to trade? Yes or no? And which direction? Sure, absolutely. So if the opposite happens, so if the current candle ends up being a candle that looks like this, then as soon as, by the way, this week I think the new candle will form at 8 a.m. Okay, so because of the daylight savings, so look at this at 8 a.m. You would basically enter the trade in this direction as such. Okay, so the two options are we're either going to break, we're getting to the very skinny part of the triangle, so it's bound to happen. We're either going to break down, or we might get an inside candle, and if we've got enough room, we might get a sneaky trade back up. Okay, so those are the two possibilities for the GBP USD, and that pattern looks really good. Okay, Remember what I always say about converging triangles. It's a pattern that takes a while to form, so that means a lot of people can see it happening, which means the more participants that we have into the market, the more opportunity we have for the pattern to play out. Okay. Question, I think it was 7 a.m. this morning. And Romy, I didn't check this morning exactly, but I know, has Europe gone into daylight savings yet? Because I think they normally take 1 week extra. So for this week only, okay, if Europe has already gone into daylight savings, and I don't know if they have, I can't remember, then it will be 7 a.m. brand new candle Sydney time. Okay, so if someone can just check that while I'm doing this and confirm with me, I'll let everybody know. Okay, so this is a really nice pattern. The longer it takes to form, the more people see it, and therefore the more it can play out. So that's why I really like these. Okay, let's move on. Let's have a look at gold. Okay, gold is starting to, doesn't really know if it's what's happening. I get the feeling that on a 4-hour chart, I can get some kind of play out of this. Give me one moment. How does that look, guys? Is it, am I close enough? Can we accept this as a channel? What do we think? I'm on a 4-hour gold chart. Yeah, we're happy with that? Okay, so then if we're gonna play this channel, I'm on a 4-hour, let me zoom back to normal size so we can all see. If I'm willing to do that, then what I'm gonna be looking for is the following. I'm gonna wait for it to come to this level, to come down to me, and then I'm going to look for price action to trade back up the channel. Okay, remember when I trade a channel, I'm ignoring trend. Okay, I believe that a healthy channel is stronger than trend, and you can trade against the trend because you could see that this particular channel would be trending downwards, but I'm still happy to trade against it on the fringes. Okay, and this one definitely qualifies as a channel because I've got plenty of touches both sides. Okay, so let's do that. So for gold, we will wait for the market to come to us, all right, and then we're going to trade in this direction. Question, as that trend line holds, would you trade if it goes up first then down? Okay, so I think the question that's been asked is what happens if this goes back up to the line? Can I trade it from there downwards? What do we think? Can I do that? Would it be legitimate? Everybody's saying yes, pretty much. The answer is yes, because we're still trading that line 1, 2, 3, 4, 5 touches. Okay, we're in a heavy trend line heading downwards. So the answer to the question, Sanika, is yes. Okay, so I just don't think it's going to go there, but if it does, I'm happy to trade it. All right, I just get the feeling it's going to come down first, and this is the trade that's probably more likely going to show up before the other one. But either way, as we said, doesn't matter which one, as long as we get it. Okay. All right, so that's on a 4-hour for gold. So that's what we have. Again, if you've never traded gold, what I suggest is take a demo trade first so that you understand that whenever you trade an instrument that you're not accustomed to, take a demo trade first so that you make sure that you know what you're doing and you understand the sizings, etc., etc. Let's move on. US yen. Okay, US yen's coming right back up to this floor again. Give me one moment. Let me just draw on my chart. Okay, I've just changed computers, so I haven't configured every single thing on my MetaTrader. So for those of you who don't know, I want to configure one of these little boxes. So in this area here, where is it? In the shape area here, I right click, I go to customize. I'll get a box that pops up. On my left hand side, I should see there, that one rectangle. I'm going to insert it and then I'm going to click close. Now it's up here. I click on it, and the way I just right click, hold and drag, and then if I want to change the color on the corners, double click, it lights up, right click, properties, change the color that I'm used to is dim gray. Where is it? That one there. Click, and there we are. To delete it, when it's lit up, just hit delete off your keyboard. Alright, so what I wanted to do is I'm coming right back up to this region again right now. Now we've had one rejection, two rejections, three rejections. Will we get a fourth rejection? Question mark. So what should also be noted as well is that it's not as obvious as it looks, but it's coming downwards. Okay. Normally, if this was coming down at a higher degree, like something like this, for example, like that, the tendency is that when you break through here, you can usually get back up to that level there. Okay, this pattern's not quite like that, and I'll cover that when I do pattern trading next, but it is going down at a much gentler, more gentler level. So there's two probabilities of this trade. This is what I think might happen. And I don't care which one happens as long as we trade it when it does happen. Okay, option number one. We could get a nice breaking candle like this, which would indicate straight away a sell. Second, that's option one. Okay, option two, we could get another inside candle situation which could shoot us back up. Either one is a valid entry and valid trade for this particular market. Which one do I think might happen? I just get the feeling that this one's going to happen more than the other one. But I don't actually care. I actually prefer the other one because the other one psychologically, for me personally, it's easier for me to trade the other one than this one. This one's a little bit more difficult for me to trade, but I get the feeling that this one here that I'm showing you right now is the one that's going to show up. Okay, any questions on that one? So that's on a daily US yen. Okay, so and if anybody traded, see there was a nice engulfing candle here. If anybody traded that, that's hit one-to-one target now. I think I mentioned this one on Thursday that we saw. It's actually hit the one-to-one target now. Okay, so if anybody's on that one. All right, so that's US yen. Let's play it out and let's see what happens. So normally whenever you do any kind of pattern trading or you analyze your charts like I'm doing right now, leave the markings on your chart. So this line, I'll leave it there because at the very least what it's going to remind you of after it plays out, it will show you how accurate your lines on your charts were. All right, and it's a very, very important thing that you need to develop and learn because the more accurate you draw support lines, resistance lines, regions, hotspots, all that kind of thing, the better your trading is going to get. Okay, so always draw on your charts, commit to them, and then after it's happened, then come back and look at it and just see how well you drew them on or did not draw them on. Okay, Euro Yen. At first glance here, do we have a trade on? Yes or no? And give me a direction. got one person, I've got two sellers, got 3, 4 sellers. I've got one person saying no, no trade. 6, 7, 8, 9. Okay, I'll give you roughly I'm getting about 80% of you saying there is a sell. When I first looked at it, I thought there was a sell as well, and I got excited because I said, hey, we're going to get a trade off during the class. But it's not a trade. Okay, the reason is, if I'm selling, look what my trend is saying. My trend is saying that I'm going upwards. Okay, so to sell, if I'm going to go against the trend, I would have to do it off a geometric pattern, meaning in converging triangle or parallel lines or resistance lines or whatever. Now the resistance line is on my chart right there, and I'm not up here. I'm too low. So the answer is no trade. Does everybody understand the reasons why I've said what I've said? It's important that you understand it, because when I'm not there right next to you and you're analyzing the chart by yourself, you need to understand that this is not a sell. Yes, it looks like an engulfing candle to shoot downwards, but it's in the wrong spot. Okay, that's what I'm trying to say. It's in the wrong spot. All right, so it's also it's a body engulfing, and it's an inside candle as well. So what we're going to look for here, since we are in uptrend, we're coming down. What we might get is we might get an inside candle so that we can shoot back up. Okay, now when we've got this trend line that looks very strong, when you get the setup to shoot back up, it always make sure that we've got enough room to get to our 1-to-1 risk point. Okay, so that's very, very important. Okay, question. So the blue line is a short trend, but the overall trend is down. Okay, give me 1 second. So my moving averages, Phil, give me 1 second. I'm trying to get it into the right spot. Okay, yeah. The black one is my 24 exponential, and the blue one is my 12 exponential. Okay, when the black is on top of the blue, like from here onwards, we are in downtrend, but over here they've crossed back over. The 24 is at the bottom and the 12 is at the top, so we are, in theory, we are in uptrend from that point onwards. Okay, so when we're in uptrend, we are allowed to counter trend trade. We are allowed, but we need a legitimate reason. Okay, Alan is pointing out, he's telling me that we are at the 61.8 Fibonacci retracement, and I imagine you're talking from here to here to there. Is that what you're saying, Alan? Let me check it. And that is correct. So basically, when I go from that level A to B, and then I retrace back to C, it falls on my 61.8 Fibonacci retracement. So technically, if you wanted to trade this, you could. The reason would be an ABC pattern. Now, an ABC pattern does not have a super high probability. It's probably got a 50% probability. Okay, I would prefer to trade off this line more than off this Fibonacci retracement. Okay, so if in your trading rules you're allowed to trade off the 61.8 counter trend trade like this, if you get the price action, well then fantastic, go for it. So the major point that I always try to make is you can trade wherever you like, okay? Just as long as you're consistent about it. And the only way that you're going to be consistent about it is if it's written in your trading rules. Okay, so Nika's asking what would be my target? Who can answer that question? My entry, this is an inside candle, so I would have entered the trade about here. And I've broken down. My stop has to be about there based on price action. So what would be my first target at the very minimum? Talk to me in ratios, okay? Talk to me in ratios, okay? Thank you, Alan. My 1-to-1 point. So if this distance here is X, then I have to go X here, which would put me about there. I'm just doing this visually. So this level to me looks at about 125.70-ish, roughly. And then my second target could be 2X, which would put me, I don't know, about here somewhere. So this is there, and this is there. Does that make sense to everybody? So if anybody does not know how to work out the 1-to-1 ratio, it's very, very simple. Just do this on your chart. Grab a little line, draw it where you would have entered, right, and then stretch it to where you think the stop is, say like that. Then grab that line and shift it along there as an example, and that's the target. Okay. All right, so if anybody wants that one, I'm not going to trade that one because that's not part of my rules. Okay, otherwise I wouldn't mind having a go at it, but I would have preferred it to be up here. So what I'm looking for here is some confirmation over here, and I want to go in that direction. Okay, let's move on. Kiwi dollar. Sanika, just quickly, just let me go back. Would I have a Fibonacci target? If you're going to have a Fibonacci target, I'll do a class on Fibonacci and pattern trading so we can all get a better understanding. Probably a 38.2 would be your T1 and your 61.8 would be your T2. Okay, so if you want to work with something, all right. Kiwi dollar. Kiwi dollar is pushing and pushing and pushing, and it's coming up towards. It's been met with a lot of resistance, and we're getting close to that 70 level now. Let me just see something. I really want to be a seller here. I really do. I just can't find the reason to sell because we've just gone through those levels. You know, we had, let me look at a 4-hour chart. Let's see if I can find the reason to sell. Now I've got nothing. For some reason I want to sell, but I'm not going to sell just because I feel like it. So the answer is Kiwi dollar. In theory, we're still in uptrend. So what I would be looking for is something to occur in this region for me to buy again. Okay, now that sounds really contradictory, that fact that I just said I want to be a seller, and then all of a sudden now I'm saying I'll wait for a pullback and then I want to buy. Okay, so me wanting to sell is just like a hunch. Me wanting to buy is if I can see evidence on the chart. Okay, and if it does show up, I will buy. All right, so that's what I'll be looking. We're in uptrend. Look, from all the way here, it's a messy uptrend, but it is uptrend. All right, so we had a rising wedge going through here that broke out, so the pattern got spoiled. It's just really, it's a messy chart. Okay, so Kiwi dollar, wait for a pullback and let's see if we can get some kind of an entry. Let's move on. Euro Aussie. This is a very interesting chart because the Euro Aussie tends to be the inverse of the Aussie dollar. Okay, Aussie dollar's been going in one direction, pretty much upwards, and this one's going sideways. So this is it's falling out of correlation. Okay, so I just get the feeling that it just really wants to violently go down, but it just has not happened. So it's falling out of correlation. What I mean by that is it's kind of like imagine there's one vehicle driving on the road, and then there's a car that's following it behindly. Okay, and everywhere the first car goes, the second car follows it. All of a sudden, the first car takes a couple of turns, but the car behind it forgets to turn and keeps going straight or turns in the other direction. Eventually, it wants to go back to follow that car, but it's taken a bit of a detour. All right, so the trade that I'm looking for is the correction trade, when this corrects and catches back up to the car. I don't know if I explained that very well, but it's just a thought so that you have a visual idea of what I'm talking about. Did everybody understand that? Did I lose anybody in that comment? No, we're all good? Fantastic. All right. So that's what I'm kind of looking for. So considering we are technically in downtrend, okay, this correction may be just popping up here, and then you're just going to get the really nice setup, and then bang, that's the trade. Okay, so really look for this one. Make sure you put this chart on your high alert, because this is a trade that could give you 3-to-1. Okay, 3-to-1 on the Euro Aussie could equal like 500 pips. So make this a priority chart. Look at this every day at the new candle, and let's see if we can hit this trade. So it's highly in a position, getting ready to snap back into correlation. So let's keep that one on our alert. Okay, finally, let's have a look at the Aussie 200, the index. Okay. There was this would have been a trade that we would have got stopped out on if anybody took it. Inside candles right there. It shot up initially, but then it came back down, and you probably just would have got stopped out here. Did anybody trade that? Can I just get a show of hands? Did anybody take that trade? Okay, no one did. All right. What if this is a tricky one? This is when it gets just enough of normally there's not much discretion involved, but look right now, the two moving averages are just at the point where they want to cross back over. Okay, tomorrow there is a chance that this becomes an inside candle, and you're going to get a fractal over here. So let's say that this candle turns out to be like this. Okay, an inside candle with a fractal there. In theory, if you break through there, you should be allowed to trade it unless these two moving averages cross back over. So you're going to have to make a decision. It's going to be a tight one, whether you feel yes, you're still in the uptrend, or no, you're not in the uptrend anymore. Okay, so let's wait and see it tomorrow. If I decide to trade it, I will send out the Twitter message so that you can see it, so that you'll be alerted. This is a tight one. But what may happen, and this is what always happens with price action, this may just go down there like that, and then there's no trade, and we just move on and we look for the next one. Okay, so that's what I have today. So let me just go back and revise back through everything that I've gone through, and I'm just going to see, I really want to see if I can take a trade. So let me just have a quick look at a few other time zones. If anybody wants to look at another chart, just call it out and I'll have a look, see if I can, I'd like to see if I can trigger a trade. Okay, so go again. Aussie dollar waiting for a pullback on an uptrend. Euro USD, we've broken the tops, need a pullback for a consideration of a trade. GBP USD, we're trading inside this converging triangle. We're just about set. We'll probably trigger tomorrow. All right. Gold, 4-hour channel. Let's wait till we get to the perimeters of the channel and look for the trade. US yen. We are approaching this floor. There's a high probability of a straight break and a down trade tomorrow, or we could get an inside candle, but that will be ready on Wednesday. Euro yen, waiting for a pullback. Kiwi dollar will just leave aside a little bit for now. Euro AUD, we're heavily out of correlation, looking for correction in the way of a short. Aussie 200, let's see if this inside candle holds for the and if it does, we'll have a setup tomorrow morning. UK daylight savings, so 7 a.m. Okay, so UK is in daylight saving. Thank you, Romy. So that means that the candles appear on your chart at 7 a.m. if you're on Eastern Standard Time. If you're in Perth, because there's a few of you guys in Perth, I think that's 5 a.m. Okay, so that's when you would make your trading decision. Euro pound. Someone wants to look at the euro pound. The euro pound's very, very slow. So I prefer not to look at the euro pound. I'll apologize in advance, Ray. It just doesn't have enough room to get to my one-to-one levels, so it's not one that I would trade. Okay, SP200, is that in a channel? Let's have a look. Do you mean the SP500, Alan? Do you mean... Oh, the ASX. Sorry, I've just changed charts. What am I looking now? S&P 500. That's in a heavy uptrend. Since I got it here, I'll just have a look at it. Okay, let me go back. Aussie 200 channel. What do we think? Okay, this is my opinion on this one. See, these points are very significant. The market pulled back quite a lot, okay, and they don't sit on the lines. So although that one does, and we got 3 and 3 up the top here, these are very significant points there. So I'm going to say no. All right, so it's something that I possibly would not trade. All right, I'm quite strict on my channels. Like if it was a minor inflection like there, yes, but this is significant. Okay. Any other questions? Anybody want to make a comment, an observation? Let me have I'm just going to glance through a couple of charts. I've got a little bit of spare time. I really want to see if I can get a trade away. So let me just change and let me look at a couple of things. That's a nice trend, isn't it? Oh, nearly. Okay, so I don't like to force the market, but I'm really looking for a couple of things. No, there's just nothing there today, guys. Let me look at oil, WTI. We could get a good price action in this direction. This is oil. I'm looking at oil. You still don't have the setup, but it's pulled back nicely. This would be worth keeping an eye on, this one. All right, I don't really have anything else for us today, guys. Any final questions before we wrap it up? No? All right, this week I might do something on pattern trading. Okay, we might have a bit of a look at divergence as well. So if you're interested in pattern trading, come on Thursday, same time, 3:30 as always. Enjoy your trading week. Just remember, Aussie US dollar is the hot one under the influence of data. Tomorrow, RBA announcement, 2:30 and 11:30 retail sales. So just have those on your calendar. I'll see you all on Thursday at 3:30. Have a great week. Bye for now.